All right, we are live now. Okay, so I wanted to go through and see if we can find any signals here, and mostly I'd probably, quite frankly, be looking for buys now that the markets are down about 1.25%, 1.5%. But we'll go through the sales and see if there's anything. But anything that hasn't moved to the downside on a day like today probably is stronger than what we'd think. But we'll go through this. So like Lennar, and remember we always have to be careful of when earnings are at this point of the year. Uh, so Lennar is down only 0.5% here. We have the first thing that is going to prompt us to even look at something is going to be this medium-term crossover, which means that the medium-term predictive line crosses from above to below in the case of a bearish signal to the downside. So that's an indication of bearishness. We want to see the predicted range, which is here of a high of 44.70 and a low of 43.56. Now we see we were trading 43.90. That's telling me that whatever weakness that it saw there isn't manifesting itself on a day like today when we're down, like I said, just generically 1.25%. Then perhaps this isn't the best signal. So that would probably tell me, probably stay away. Everything else is the short term has crossed over and is downward sloping. The medium term crossed over from yesterday or Friday to today. And then the long term is still above here, but it's downward sloping. So all those things in the neural index in the red, all those things are pointing down, but we're trading 43.87 now. But it was predicting a high of 44.70. We're trading 43.87. So this is something that we can actually keep in, pardon me. We can keep that in for a downside move. Like I said, I'd probably want to lead. I'll lead with something to the long side. Hang on, something just triggered here. Oh, that's didn't trigger. It was just an announcement from Thinkorswim. I would probably lead from something to the upside, and if we get filled, balance it out with something to the downside. That's what I would do. Okay, so we're going to keep that up here, but who knows? Apple, we know, has we played it on a day trade today. It's down now 1.35%, but actually that's weird that triggered that. This is showing that it triggered to the downside, and it didn't. These are all pointing up. So let's keep. I don't know what's going on there. Why did that get into our IntelliScan? Let's take a look at that. Bearish. It must have, it must have triggered to the upside, and it happened a couple days ago. So, at any rate, with it down 1.3 something percent, but this happened quite a bit ago. This happened on the 15th. We're not going to play anything with that. United triggered to the upside, but look at what we see here. We're seeing the short term that we did have the crossover, but we're seeing the short term difference sharply going down, and then we're seeing the medium and long term predicted differences both flattening out. This is telling me that whatever bullishness that we saw here is no longer going through. So let's stop with that. And so Amazon, we're looking at these must be we're getting short-term crossovers here, but this is again not looking like anything that we want. Predictive differences are turning over. These are rolling over, and we can see that Amazon's down nearly 3%. Nice work, Richard, on that AMAT. In at 57, out at 64. Good work. So Amazon's not something we want to hold on to. AMAT we just talked about, but that showed up here on our crossover. That is obviously, with that down 3.5%, not what we want to play. Target, we have flat predictive differences here and a short-term crossover that happened on the 17th. So I would say that we would not be looking there. What is Target doing right now? Target is actually about unchanged. So not the worst in the world, but these are telling me that whatever bullishness that we're seeing in the short term really hasn't caught on anywhere else. So we're going to stay away from target. Chevron, not so bad. It's down 2% though, with a predicted low of 13.72. We're trading 12.21. Obviously, whatever bullishness that was seen has gone away, and you're going to see you're going to see that. But I'm looking for something, that an environment that is trading down like this. I'm looking for some strength. Maybe we find it here. What's happening in XOM? XOM's down nearly 1.75%, so that's going to be way below. Trading 71.76, predicted low is 72.34. That gets knocked out. 3M down nearly 2%. Predicted low 194.26. We're trading 192.25, so way below. Any of the strength that we're seeing the day before, we're not seeing anymore. MRK. Merck is actually unchanged. We had a short-term crossover that happened back here on the 15th, medium crossover that happened on the 18th, and the long-term is almost crossing over. This might be something that we would look at. And I would always want to take a look at our biotech guru, Mike Patton, and see what he thinks about it. But this is going to stay in here. Micron, we were trading that a lot a few weeks ago. We're not trading that anymore. So any bullishness, obviously, that we've seen here, it's down 5% today. So that's not happening. And then Weibo, probably not, because Chinese stocks are soft today. Yeah, down 12%. So we talked about the bad growth numbers coming out of China that hit all the Chinese stocks: JD, Baidu, Baba, WB. You can go on down the line. So the only one that has stuck out here is Merck, and Lennar possibly to the downside. But Merck, so you say, okay, we have a possible, not something that we absolutely saying we want to jump into, but we have a possible thing. What can we do here in Merck? Well, let's. I'd be looking at something going out to regular Feb, which is 215. We need the underlying price of 75.86. And we need the implied vol for that. Now, we got to be careful here, because we have on February 1st, we have earnings. So we'd have to do something. We're kind of stuck here, because if we do this on February 1st, look at what the implied vol is for this. It's 27, where all the other ones are basically 20 to 21. So we're paying for implied volatility that we probably wouldn't use, because we're not intending to hold this through earnings. So we're going to pay premium for something here, and you're like, well, maybe you don't want to buy that implied volatility because it's high. What about selling it? The thing is that this implied volatility is not going to come in until afterwards. So although I like the setup, the expirations aren't lining up, so none of these make sense to do. And so that is. That's part of the analysis. The analysis is not necessarily to find trades or signals. What you're looking for is, sometimes your analysis does a really good job of keeping you out of trades that you normally would say, hey, I want to do this like Merck. Well, part of our analysis is when is earnings? Well, earnings are on the 1st. Well, we either have to do something for today is Tuesday, we have to do something for Friday, which may or may not work out, or we have to buy implied volatility that either we're paying too much or is not going to come in on the credit side. So I would say that none of these are making sense to me. So any questions on that? So we went through, we go through the analysis to analyze something, not to necessarily find something. Scientific method. Very disciplined, going through and trying to find things, or trying to find answers. The answer here was that no, I don't see any opportunities. All right, if there's no questions on that, I'm going to turn off the recorder. I'll render this. Not a super long video, only about 10 minutes long, but hopefully we've resolved the issues with the MP4s. You can always, I will post this in our blog too, where that's simply www. Not 4 W's, Mike, just 2. prospertrading.com/blog. I'll post it there too. All right. Thank you very much, and I will get this out to you as soon as possible.